welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Wednesday, August 7th, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low, thus continuing that trend that began for the previous day's trading following the bearish harami type pattern. We've had confirmation of that. Prior to today's trading, we saw the market close in a bearish manner down below the 1700 level, which was an important psychological level for this market, a round number. And towards the low of that trading day, we saw the market find support around the Tenkan-sen. Today, the market has traded through the Tenkan-sen and has closed down below the Tenkan-sen, suggesting that we may have had a change in sentiment in this market. It's not a terribly bearish close. We have the buyers in control of this market for today's trading by closing just up above the midpoint level, but it's not terribly strong control. But what we'd like to see as a trend initiates and then continues on its way is that the sellers are taking control of the market, and here they've actually lost control. So this does suggest that there may be potential for a change of trend. Now, having said that, however, we do have a black body in this candle, and that suggests that the sellers have made net bearish progress. So the sellers are continuing the downside momentum in net terms that they began with the previous day's trading, but the amount of momentum that they've had is starting to weaken. The size of the body is smaller than the previous body, and that suggests that there could be potential for a change of trend as well. Now, the market interacted with the important 1687 level of support, and that was a previous area of resistance and support, and moving forward it is a very important level for this market. If the market does trade in a bearish manner down through this level and through the low, which is down around the 1685 level, then we could quickly see the market testing to the top of this highlighted zone of previous support and resistance, as we saw in the recent past, and it's likely that we will see the market hold up around there as a very strong support level. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here today we saw the market trading through the 78.6% level and testing to and just beyond the 100% level and being rejected from there. So these sellers did lose some commitment down below there quite substantially as they were testing down to those levels. So that does suggest potential for a change of trend. In terms of the Fibonacci retracement, we're examining the relationship of the first time frame downtrend to the previous time the market was trending up, and here today we've seen the market trading through the 50% level, closing down below there, testing down below the 61.8% level and almost to the 78.6% and being rejected from those areas, so suggesting potential for a change of trend, combined with the fact that the sellers have lost commitment does suggest there could be a change of trend, but bearing in mind that we still have a black body to this candle, so the sellers still do have some downside momentum in net terms. In terms of Ichimoku, we're obviously still a bullish market in a long-term time frame with the market trading up above the cloud. We are still trading a long way above there. It wouldn't surprise to see the market test lower. The equilibrium suggested by the cloud is a long way away, so markets tend to move between areas of equilibrium to areas of disequilibrium. We are in a very strong disequilibrium position at the moment, so we will be looking for the market to potentially retrace, but I suggest that if we do, the 1675 level roughly may hold as very strong support for this market. The market is also trading up above the Kijun-sen, so we're bullish in the medium term time frame. That Kijun-sen has turned flat and price action is being attracted back towards the Kijun-sen, so a test down below the 1687 level and a close down below there wouldn't surprise. If we also look at the Tenkan-sen, as I've already mentioned, we have now closed down below there, suggesting a change of sentiment in this market. We are looking for follow through now. So all of this means that the 1687 level and just below to around the low is important. In terms of the current candlestick as well, it is a potential reversal pattern in the Japanese candlestick reversal pattern. It's a potential hammer. We have the prior downtrend, and here we have a small body with a largish shadow on the bottom. So it's a type of hammer pattern, and does suggest that there could be a change of trend. So we will be looking for a potential higher high and higher low. That fits in line with what we've seen with the Fibonacci ratios, and with the sellers not supporting the market to the downside terribly strongly. But there has still been support in net terms, with this being a black body candle. So there is potential for the market to trade lower as well. I think what we need to do is really wait for resolution. The 1700 round number, if the market does rally, will potentially hold a strong resistance once again. So we do need to watch that, but certainly at the moment 1687 is an important level, as will the 1675 level be if the market does continue to sell off.